Hey, good morning, everyone. Brian Hoops here with Midwest Market Solutions, Market Insider TV. This is our opening commentary, and it is Thursday, July the 17th. Good morning, everybody. A couple of programming notes here real quickly. I will be doing RFD TV this morning as well as Friday morning and talking about the markets at 8:15 Central Time. This will be our last TV segment of the day as we will be traveling this afternoon and all day tomorrow. So we won't have our open or closing comments tomorrow. No close this afternoon. We sent out our newsletter already, and you can sign up for our newsletter at our website, MidwestMarketSolutions.com. Get a free 30-day trial. See if that's something that you're interested in continuing to receive. You can also follow us on Twitter, Midwest Markets, Brian Hoops, where we send out market information. We sent out the export sales out already this morning for our Twitter followers and members of our text messaging service. All right, let's get into some of the news here. Now, the weather maps continue to call for nearly ideal growing conditions across the Corn Belt. 6-10 day, 8 to 14 day, both have that above normal temps and above normal precip, which is like a greenhouse type effect through almost late July. We're almost getting into early August. Now, I do want to note that the 6-10 day forecasts are bearish here for the Corn Belt. But those areas that are planting double crop soybeans, so you're talking Missouri, southern Illinois, southern Indiana, they're going to have above normal temps and below normal precip in the longer term forecast. So the rains that they're going to receive over the next 7 days are vitally important that they receive those, and it's good moisture for the crop that's being planted, because it's going to be hot and dry in the next 10 days. And that may, I don't think it's going to be a major market mover, but it's enough to maybe keep us from finding a sell-off in the soybean complex. Export sales, pretty disappointing overall. Wheat at 18.2 million bushels. Old crop corn was a marking year low at only 3.8, with new crop at 22.3. Old crop beans at 10, new crop at 19.5. Certainly beans are kind of the standout here, but overall this report not a great report by any stretch of the imagination. Beef sales, also disappointing, only 8.8 million tons, shipments at only 10.3. Those are down from our normal pace that we have been on the last 5, 6, 8 weeks. Pork sales following that same pattern, 17.1 million tons, shipments at 26.5. So I thought disappointing is a good way to describe it. We did have the holiday in there, July 4th holiday, so that accounts for some of this slow export number. But again, I think overall a little bit of a disappointment for the trade. Cattle Facts show list this week. It's about 223,000 head. A lot of the trade had thought we'd be steady to lower. I thought we'd be more steady this week with packer margins starting to suffer and keep us from paying higher cash money. Now we are starting to see bids surfacing 225 to 228, but asking prices are 232 in the Southern Plains. So they are looking at trying to pay steady, no better than steady money. The feedlots want a little bit better than that, holding out with the futures market rallying the last 2 days of this week. That futures could really set the tone for the cash markets this week. If we continue to move higher in the futures, cash feedlots will definitely become very stout in their marketings for the cash markets. All right, I'm going to sign off here. Have a great day, everyone. Good luck and good trading. I will talk to you again very soon. This has been Brian Hoops for Midwest Markets.